Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. The situation in the cryptocurrency market has remained unchanged for a month and a half. On the daily time frame, it is still a sluggish, weak upward correction, while on the 4-hour time frame it is approximately 80% flat, with a minimal upward inclination. Thus, this is an extremely unattractive time for trading, as there is neither a clear flat nor a clear trend. After Bitcoin exited the sideways channel, we considered the flat cancelled because the price action above the channel was too strong. However, deviations can come in various forms. Recent movements in the leading cryptocurrencies show that the flat continues. For example, last week, the price dropped to the lower boundary, formed a clear deviation, took liquidity for buying to the lower boundary of the sideways channel, and is now rising again. Therefore, the internal patterns of the sideways channels are once again of no significance, as the price could soon return to the upper boundary of the channel. As we have established, Bitcoin has been trading in a flat for a month and a half. This indicates that supply and demand are approximately equal at this time. However, despite the evident flat, many experts continue to discuss Bitcoin accumulation by whales, increased investments in Bitcoin ETFs, and even the notion that Bitcoin has become a safe haven amid the war in Iran. It is worth recalling that Bitcoin has been in a downward trend for the past 6 months. Currently, we see no reason for a new upward trend to begin, and there are no bullish patterns on the daily time frame. On the daily time frame, Bitcoin continues to form a downward trend. The trend structure is identified as bearish, and the CHOCH line currently at the level of 97,900 USD. Only above this level can it be considered that the downward trend has entered. The current target for the downward trend remains nearly at 57,500 USD, corresponding to the 61% Fibonacci retracement level. Given no signs of a trend reversal to the upside, we believe the decline will continue. On the daily time frame, the nearest area of interest, point of interest, for new sell trades is the range of 79,500 and 81,100 USD. Additionally, about a week ago, another bearish FVG formed, with a preliminary withdrawal of selling liquidity, and the price even reacted to it. However, on the 4-hour time frame, the probability of the sideways trend remains high throughout this period. On the 4-hour time frame, the price has dropped to the lower boundary of the sideways channel, formed a deviation, bounced from it, and may now rise again. The CHOCH line, which provides support for the upward correction, is at 65,500 USD. Breaking this line will mark the end of a month and a half long correction. During the latest phase of the decline, two new bearish FVGs were formed. But if the flat continues, the internal patterns hold no significance. On the daily timeframe, Ethereum continues to form a downtrend. There are 3 bearish patterns, all of them FVGs, which can be used as a potential areas for future short entries. However, despite a month and a half of correction, Ethereum has not even reached the nearest one. The closest FSG is located in the 2,480 USD, 2,630 zone, and this is the key area of interest for traders. The CHOCH level stands at 33.95, marking the last lower high. As long as the price remains below this level, the downtrend remains intact. On the 4-hour timeframe, price broke out of the range and briefly formed what was looking an upward trend, but it faded very quickly. In a strong downtrend, any upside move should be treated as a correction by default. The past month and a half has clearly shown how difficult it is to trade these corrective moves. Below the trend line, as we see on the green line, lie the key targets for market makers, which is why we remain confident that the broader downtrend will continue. On the 4-hour chart, the only relevant POAs are the last 3 bearish FVGs. With the most recent one being fulfilled yesterday, the reaction from this area could trigger another leg lower. That's all for today. See you online soon and good luck.